The United States debt ceiling crisis is a political standoff between the Democratic-controlled House of Representatives and the Republican-controlled Senate over raising the debt ceiling. The debt ceiling is a legislative limit on the amount of money that the United States government can borrow. The current debt ceiling is $31.4 trillion. The Democrats want to raise the debt ceiling without any conditions, while the Republicans want to attach conditions to the debt ceiling increase, such as cuts to spending or tax increases. The Republicans have said that they will not vote to raise the debt ceiling unless the Democrats agree to their demands. The debt ceiling crisis is a serious threat to the United States economy. If the debt ceiling is not raised, the United States government will not be able to pay its bills and will default on its debt. A default on the debt would have a devastating impact on the economy, leading to a recession, job losses, and a decline in the value of the dollar. The Democrats and Republicans have been negotiating for months, but they have not been able to reach an agreement. The debt ceiling is scheduled to be reached on June 1, 2023. If the Democrats and Republicans do not reach an agreement by then, the United States government will default on its debt. The debt ceiling crisis is a major political crisis that could have serious consequences for the United States economy. The Democrats and Republicans need to find a way to compromise and raise the debt ceiling before it is too late. Here are some of the potential economic impacts of a debt ceiling default. Stock market crash. The stock market would likely crash if the United States government defaulted on its debt. This would lead to a loss of wealth for many Americans and a decline in the value of the dollar. Recession. A debt ceiling default would likely lead to a recession. This would mean job losses, a decline in economic activity, and a decrease in consumer spending. Inflation. A debt ceiling default could lead to inflation. This is because the government would have to print more money to pay its bills, which would devalue the dollar. Global economic crisis. A debt ceiling default could lead to a global economic crisis. This is because other countries would lose confidence in the United States government and its ability to pay its debts. This could lead to a decline in trade and investment, which would hurt the economies of other countries. The debt ceiling crisis is a serious threat to the United States economy. The Democrats and Republicans need to find a way to compromise and raise the debt ceiling before it is too late.